What's happening, crypto crew? Get ready for a rapid-fire download of the news that's shaking up the digital asset world. The pace is insane, and if you're not plugged in, you're missing out. We've got groundbreaking developments that could redefine entire markets, massive shifts in investor sentiment, and innovations that are pushing the boundaries of what's possible. Stay tuned, because you're about to get the inside scoop on the stories that everyone will be talking about. First up, a major player is set to redefine Bitcoin's role in decentralized finance, bringing a whole new level of programmability and potentially igniting unprecedented trading activity. Then, we'll dive into the latest price action for Bitcoin, dissecting why the bears are still firmly in control despite some optimistic economic signals. After that, we're connecting the dots between a tech titan's financial performance and the crypto market's pulse. Could this tech giant's earnings be the crystal ball for Bitcoin's next move? And finally, we're exploring how Bitcoin is making waves in an entirely unexpected sector, proving its value far beyond just digital trading. You don't want to miss a single second of this. Hit that like button, subscribe, and ring the notification bell so you're always in the loop. A new era for Bitcoin DeFi. Get ready, because the cryptocurrency world is buzzing with the impending launch of Hemi coin on Binance, slated for August 29, 2025. This isn't just another token entering the arena. It's a potential game-changer aiming to infuse Bitcoin's ecosystem with the programmability that has long been Ethereum's domain. Imagine Bitcoin, renowned for its robust security, suddenly gaining the ability to support decentralized applications, dApps, and smart contracts. That's the promise of Hemi, and it's backed by significant institutional confidence, evidenced by a hefty $15 million funding round led by investors like Izzy Labs. This level of backing signals a strong belief in Hemi's mission to bridge the gap between Bitcoin's established strengths and the dynamic world of decentralized finance. The introduction of features like 50x leverage trading immediately signals a high-octane environment. Historically, new token launches, especially those promising advanced trading options, can trigger significant market volatility and shifts in liquidity. Hemi's entrance could very well shake up the trading dynamics for both Bitcoin and Ethereum, attracting considerable attention and capital. Financial experts are keeping a close watch, noting that while leverage can boost trading volumes, it also amplifies risks, making robust risk management strategies absolutely essential for participants. The substantial institutional interest in Hemi is a powerful endorsement. These aren't just casual investors, they are strategically positioning themselves based on Hemi's potential to enhance the Bitcoin network. Transparency from the Hemi team, including public token distribution plans and clear grant initiatives, is crucial for building and maintaining this trust. Such strong backing can provide a stabilizing influence on market sentiment, particularly during periods of broader market uncertainty. Hemi's ambition extends beyond just financial products. It aims to foster a vibrant ecosystem. By bringing Ethereum-like functionalities to Bitcoin, it opens up new possibilities for developers, especially in cross-chain interoperability. This move challenges Ethereum's long-standing dominance in the dApp space and could foster a new wave of innovation within the Bitcoin network itself. However, the path is not without its challenges. The inherent volatility of high-leverage trading requires careful navigation, and balancing innovation with Bitcoin's core decentralized ethos will be critical. As traditional finance increasingly intersects with decentralized protocols, emerging projects like Hemi will also need to contend with evolving regulatory landscapes. Hemi's upcoming launch is more than just a technical integration. It's a strategic move to position Bitcoin as a more versatile asset in the burgeoning DeFi sector. Initiatives like the Binance Booster Program, designed to offer developers access to token allocations and airdrops, aim to promote wider adoption and community involvement. This inclusive approach is vital for building a resilient ecosystem capable of adapting to market shifts. But what happens when the market sentiment shifts and the charts tell a different story? Next, we'll break down why Bitcoin is currently struggling despite positive economic indicators. Bitcoin under bearish pressure amid Fed optimism. Bitcoin's price action on August 30th saw it dip below the $110,000 mark, a clear indication of persistent selling pressure that has kept the market in a bearish grip. Technical indicators across daily, 4-hour, and 1-hour timeframes consistently point towards a bearish trend, with sellers dictating the pace, evidenced by volume spikes during price declines and a failure by buyers to sustain any upward momentum. The market is currently caught between a critical support level at $107,000 and a resistance zone at $114,000, making the next significant price break pivotal for determining the short to medium-term trajectory. The market sentiment is tense, with investors divided between fears of further declines and hopes for a potential reversal. This uncertainty is amplified by a major player reportedly liquidating Bitcoin holdings to invest in Ethereum, further contributing to the selling pressure. At the start of August 30th, Bitcoin was trading around $108,526, with a total market capitalization of $2.16 trillion and a 24-hour trading volume of $47.69 billion. The inability of buyers to break through the $114,000 resistance level highlights the strength of the current bearish sentiment. While short-term technical indicators are decidedly bearish, some longer-term signals suggest underlying structural resilience. Specifically, the 200-period exponential moving average, EMA, and simple moving average, SMA, are still flashing bullish signals. This divergence indicates that despite the current downturn, the longer-term outlook for Bitcoin might be more stable than immediate price action suggests. For a bullish reversal to gain traction, Bitcoin would need to break convincingly above $109,500 with significant volume, targeting an initial level around $111,000. Adding another layer of complexity is the macroeconomic environment. The latest core PCE index for July reported a 2.9% increase, which was in line with expectations and did not reignite fears of immediate monetary tightening by the Federal Reserve. Furthermore, Federal Reserve Chair Jerome Powell's remarks at Jackson Hole were perceived as tempering inflation concerns, bolstering market optimism about a potential rate cut by the Fed in September. Such a move would typically be viewed as positive for risk assets, including cryptocurrencies. In essence, Bitcoin is navigating a period of significant uncertainty. The immediate technicals favor sellers, but a combination of longer-term chart patterns and a potentially dovish macroeconomic stance from the Federal Reserve hints at possible medium-term recovery paths. Investors are closely monitoring the $107,000 support and the $109,500 resistance levels, as these are likely to dictate the next significant market movement. But what if the performance of a tech giant could actually predict the movements of Bitcoin? We're diving into the fascinating correlation between Nvidia's earnings and the crypto market next. Nvidia's earnings, the unlikely Bitcoin predictor. Could the financial health of a leading semiconductor company be a surprisingly accurate predictor of Bitcoin's price movements? For some time now, Nvidia's quarterly earnings reports have emerged as influential signals within the cryptocurrency sphere, significantly shaping market sentiment for both traders and investors. The pattern has become increasingly clear. When Nvidia performs well, Bitcoin often follows suit, creating a dynamic that compels the crypto community to scrutinize these financial results with keen interest. The fundamental question remains whether Nvidia's fiscal performance can truly forecast the often volatile trajectory of the digital asset market. Over the past several quarters, Nvidia's earnings releases have consistently sent ripples through crypto speculation. Since the beginning of 2023, a distinct trend has emerged. Bitcoin has seen gains in 7 out of 10 quarters following Nvidia's earnings announcements. This consistent correlation has led traders to develop hypotheses about the relationship. Experts suggest that strong Nvidia quarterly outcomes tend to foster a positive sentiment around Bitcoin, sparking optimism among cryptocurrency enthusiasts and indicating a broader appetite for risk across digital assets when the tech giant thrives. In the lead-up to Nvidia's earnings reports, the cryptocurrency space often experiences heightened tension. A recurring trend sees Bitcoin experiencing a dip in anticipation of these announcements, reflecting a sense of nervousness among investors. For instance, Bitcoin's price dropped from over $116,000 to approximately $111,736 just days before the latest earnings declaration, illustrates the powerful influence of market psychology. A robust performance from Nvidia can provide a bullish catalyst for Bitcoin, whereas less impressive results could trigger a more cautious or defensive stance among crypto investors. Consequently, the link between these two entities acts as a significant barometer for overall investor sentiment. Nvidia's most recent earnings report showcased impressive figures, with revenues reaching a staggering $46.7 billion, marking a substantial 56% increase year-over-year. However, in a surprising turn of events that defied market expectations, Nvidia's stock experienced a decline of roughly 3.4% immediately following the announcement. This unexpected dip has raised questions about the reliability of the historical Nvidia-Bitcoin correlation in the current market climate. While the connection has been strong in the past, Bitcoin's muted reaction this time suggests a more discerning investor base, possibly influenced by prevailing geopolitical tensions and a general tempering of market exuberance. In today's rapidly evolving financial landscape, adaptable investment strategies are paramount. The observed connection between Nvidia's performance and Bitcoin's behavior provides traders with a potential framework for anticipating future price movements. However, the recent market reaction underscores the need for a more sophisticated and nuanced trading approach. Carefully observing Bitcoin's response to Nvidia's earnings can offer deeper insights into trader sentiments and provide a clearer picture of the prevailing risk-reward dynamics. As artificial intelligence and technological innovation continue to shape the financial arena, developing strategies that can effectively navigate market volatility becomes increasingly crucial. Keeping a close eye on Nvidia's performance can offer vital clues and tactical advantages for those looking to navigate the often unpredictable cryptocurrency market. The intricate relationship between Nvidia's technological advancements and Bitcoin's price trajectory continues to shape the broader cryptocurrency horizon. As the Web3 landscape matures, the influence of major tech players like Nvidia is expected to grow. Astute investors must remain vigilant, recognizing that while Nvidia's financial indicators can amplify market sentiment, they do not serve as an infallible predictor of market direction. In summary, while Nvidia's quarterly results can fuel optimism within the cryptocurrency sphere, they do not offer a precise prediction of future market movements. Therefore, crypto investors are advised to adopt diversified strategies that account for market volatility, technological shifts, and broader economic influences. The path forward, while uncertain, presents numerous opportunities for those prepared to adapt to the evolving market landscape. But where else is Bitcoin proving its immense value, beyond the digital trading floor? We're heading into the luxury real estate market for our final update. Bitcoin's luxury pivot, from digital gold to real estate powerhouse. The perception of Bitcoin is rapidly evolving, moving beyond its status as a speculative digital asset to become a recognized premium asset, particularly in high-value transactions like luxury real estate. As the integration of cryptocurrencies into mainstream financial activities continues, Bitcoin is increasingly being utilized for substantial purchases, signaling a growing maturity and acceptance within traditional markets. This trend suggests that Bitcoin is not just a store of value or a medium for quick trades, but a viable and preferred asset for acquiring significant tangible wealth. The luxury real estate sector, known for its high transaction values and discerning clientele, has become a key testing ground for Bitcoin adoption. Properties ranging from exclusive penthouses in metropolitan hubs to sprawling estates in desirable locations are now being listed with Bitcoin as an accepted payment method. This opens up new avenues for property developers to attract a broader, digitally native investor base and provides existing Bitcoin holders with a tangible way to leverage their digital wealth. The convenience and speed of blockchain transactions, coupled with the potential for significant capital gains, make Bitcoin an attractive option for buyers in this market segment. Several high-profile real estate transactions involving Bitcoin have already made headlines, demonstrating the practical application of this digital currency in acquiring luxury assets. These deals often involve specialized platforms or intermediaries that facilitate the conversion of Bitcoin to fiat currency for the seller, ensuring a seamless process that meets the legal and financial requirements of real estate transactions. The growing number of such deals indicates a shift in how wealth is being managed and deployed, with Bitcoin playing an increasingly prominent role. Analysts suggest that Bitcoin's increasing acceptance in luxury real estate transactions can be attributed to several factors. Firstly, the global nature of both Bitcoin and the luxury market allows for cross-border transactions with greater ease than traditional methods. Secondly, for individuals who have accumulated significant wealth in Bitcoin, using it for major purchases like property offers a way to diversify their assets into tangible forms without necessarily liquidating large amounts of cryptocurrency, potentially incurring significant tax liabilities or market impact. Furthermore, the trend reflects a broader societal shift towards embracing digital assets. As more high-net-worth individuals become comfortable with cryptocurrency, its utility in acquiring luxury goods and services, including real estate, is expected to expand. This adoption not only validates Bitcoin as a legitimate asset class, but also contributes to its mainstream integration, potentially influencing its long-term value proposition and market stability. The implications of this trend are significant. For the real estate market, it signifies a new era of digital payment integration, potentially leading to increased liquidity and a more diverse pool of buyers. For the cryptocurrency space, it represents a crucial step towards wider adoption and a demonstration of Bitcoin's utility beyond speculative trading. As more luxury brands and service providers begin to accept Bitcoin, its role as a premium asset is likely to be further solidified, blurring the lines between the digital and physical economies. This evolving use case highlights Bitcoin's adaptability and its growing influence in sectors previously dominated by traditional finance. The ability to purchase high-value assets like luxury real estate with Bitcoin marks a significant milestone in its journey towards becoming a globally recognized and utilized form of wealth. And that's a wrap on today's top stories. Let's quickly recap the biggest movers and shakers you need to know about. And that's a wrap on today's essential updates. We saw Hemi coin poised to revolutionize Bitcoin's DeFi capabilities. Bitcoin facing bearish pressure despite positive economic news, Nvidia's earnings showing a complex link to crypto markets, and Bitcoin making significant inroads into luxury real estate. Don't miss out on any future market shifts. Smash that like button, subscribe to Bitcoin Bulletin for all your crypto insights, and ring that notification bell so you're always the first to know. Follow us on all social platforms to stay connected and join the conversation. We'll see you in the next broadcast.